Good evening, everyone. Senthil here. Can everyone able to see my screen and hear my voice clearly? Thank you, Sampada. Thank you, Mr. Vath. Thank you, Deepak, Prasanna, Mayur, Mohit. Good evening, everyone. So let's start the session today. We'll wait for a few more minutes. So few more students has to join. So regular attendance is not met. So let's wait for a few more minutes. So you can ask if you from the yesterday's session, if you have any doubts, you can ask me. So today we are going to see about basics of stock market. Very basic sessions, how to put orders, how to cancel, how to put orders, how to cancel the order, what is stop loss, how to open the graphs, so how to change the time frame. So all those things we are going to learn today. So very basic things. So if you are very much expert on all those things, you can ignore the session, but still I suggest you to stay with the session. Support and resistance in Nifty. It's not only Nifty, support and resistance in the sense a place where the stock may take a support and bounce back, or resistance in the sense a stock where the place the place where it can take a resistance and fall back again. So for example, so let me remove all these studies. I'll show in a simple way. So it is a daily candle. So it's a daily candle. You can see here. So you can see here Nifty, from here it came down and again it rallied up and it went up till here and again came down and again came up till the previous high. This is called as previous high. Okay, so this is previous high. It came till here but could not able to break this high and again reversed back. So this is called as resistance level. So marking support and resistance, it's a separate technique. So we are not going to learn the trading methods based on the support and resistance. Mr. Gandharv Bajaj, you have to log off and log in again, because I think picture is visible for everyone, right? Can everyone able to see my chart? Not able to see the video. Chart, see, this is the chart. This is the chart. So it's for everyone it's clear. Whoever is not having the connectivity, you have to log out and you have to log in again. So value for Nifty and Bank Nifty, that is based on the supply and demand. Based on that only it is fluctuating. How to execute BTST orders? Okay, I'll show you, Mr. Sudarshan. So support and resistance we will learn based on the moving averages. Okay, so other than that, no need to learn support and resistance as a separate technique for a trade initiation. So that is not a part of our curriculum. So let's start the session today. So almost everyone has joined. So let's see one by one. So you can see here maybe a very small things, but still we have to learn all those things. No other option. So many members even don't know how to place stop loss. So you have to learn everything. So let's learn. So first, everyone is using different types of. The sheet was not shared. Mr. Sudandrabath, sheet is shared. You have to check in your dashboard. Sheet will not come in Telegram and it should not be published in Telegram. That's my request. Okay. So since everyone is trading in different terminal, different broker, not possible for me to show you everything. So what I'll try to do is I'll show with upstocks or kite. So I'll show with upstocks. So what is the required thing? What is how to operate this basic charts? I'll show in upstocks. So similar thing it will be available in kite, Sharekhan, angel broking, everywhere. Okay. So let's see one by one. So this I'll come to you later. Different types of order you have to learn yourself. This I'll come to you later. So first one is types of trading terminal. So types of trading terminal. The first one, whatever you are seeing here is Upstocks. This is Pro Web. So Pro Web in the sense you can log in this platform anywhere in any computer. You can log in this platform. Just open, go to upstocks.com and put your user ID and password. You can start accessing the trading terminal. So you can add the scripts in the left side. You can see the charts. You can buy and sell from the Pro Web itself. So it is available across all the platforms. Say like Mac OS and also Windows. It is available. Android also it's available. And even in Tab you can open the Chrome and you can start using this. So this is the simpler version. So you can say that it is very easy to use, easy to do the research, easy to analyze, easy to operate anywhere. No need to carry anything. So wherever you find a computer, you can just log in and you can start using. Very, very user friendly. This is the first one. More details about this we will see later. So this is Pro Web. Just a minute. This is Pro Web. Okay, so you can see here, you can see the buy and you can see putting how to put buy and sell orders. You can see here. So all the details which is available in Pro Web itself. So you can use in any computer. So that is the simpler way of explanation. Next, this is Pro Mobile. So mobile in the sense you can go to Play Store or App Store in Android or iOS, and you can download your this platform by searching for Upstocks itself. You will be getting a platform, small installer based software. You can install this and you can start putting your user ID and password and you can start using this. Similar like web, how you are going to see this in a computer or laptop, same like that, with equal potential software is available in this mobile also, so that you can start using it whenever you are in a mood. So don't make this as a habit for trading completely in mobile based. If you are expert, that's fine, but or else if you don't have a Wi-Fi connection in mobile, say like for example you are using only based on mobile internet, so try to avoid full-time trading in mobile itself, because many times we don't know that there is no signals. Many times we don't know there is no signals. Maybe SMS will come delayed, or we will get 10-15 WhatsApp notifications put together because there will not be signal for some time. So what happens, the price will hang. Say for example, if you are seeing 527, so it will go to 526, 528. After that, for long time it will be, you will be seeing the same price. Maybe the price might have moved up, so you'll be getting the updates late, so that it might have hit your stop loss or target if you are not watching it properly. So please make sure, don't keep mobile platform as a primary trading terminal. That is my request. So in this also you can do your chart analysis. You can see here add indicators and you can place orders. You can see the open interest. Everything is available. Next, this is Nest Trader. So it is installer based application. Installer based application in the sense you have to install in a Windows computer or laptop. So unless you install, it will not work. So you have to install in your computer. I'll say like if you are going to be a full-time trader, or say like you have a place to trade, if you are trading in a single terminal, single computer always, then it is better to download this kind of software and start using, because you can customize your graph settings. You can split your windows, and the tick updates are very fast. Say like for example, this is Sharekhan. So maybe after 10 days I will be explaining you some charting platform based on some charts explanation based on this only. So for example, when you click one click, you will get the software like this. You'll get a charts like this, and you can do F1 F2 shortcuts. Everything is customizable, and also it will be very fast. So that is on Dart stock. That is in Upstocks it is called as Dart stock, and Nest Trader is available. and in Zerodha Pi. So other platforms I'm not aware of that. Clear? So these are the basic types of terminal. That is types of terminal, mobile, web, software. Software you have to, the disadvantage is you have to install in a computer and you have to use it. In case if you are going to install, in case if you are going to use in a new computer, you have to install that. After that only you can start using it. In Zerodha it is called as Pi, Pi, Pi software. Clear? So any other doubts? Don't keep mobile based platform as a primary trading platform. If you don't have an option, you are sitting in office, you want to trade, that's fine. But for example, if you are going to be a full-time trader, then don't keep mobile based platform as a primary based platform. If you are having a Wi-Fi connection, that's fine. Okay. Reason I told you, no Bharat, that's just now I told you. The signal may be, the signal may disappear for some time. After that you will be getting, by the time price will move, there will be a low signal range. Say like for example, if you are using in 3G 4G, that's fine. If you are using suddenly if the networks goes to 2G and if it doesn't turn up, so what will happen? The price will go, the orders will not get executed. Even if you have two accounts, that's fine. What makes you uh, uh, the difference in two accounts and mobile software? If you are having two accounts in the same platform, then you have to use no other option. You are having two upstocks, then you have to use one in computer and one in mobile. Or else what you can do is one you can one you can log in using Google Chrome, one you can log in using Mozilla Firefox. That is also possible. Are we clear? Yeah. So next basic thing is how to use the terminal. So as a trader or as you are going to be a trader, so what your primary job should be is you should go through all the each and every options. You have to go and check in this trading terminal. Then only it will be like a user friendly things. You should know which option to use. You say like for example, you have taken some positions, you want to check it urgently, the positions are in profit, positions are in loss. By that time you should not start exploring or learning or calling customer care. You should not do all those things. Invest 500 rupees in your trading account, take out all the money. If you don't know how to use the trading terminal or the trading platform, take out all the money whichever is there in your trading account, invest only 500 rupees, try all the practices with Ashok Leland share. So it will not cost you loss much more than 50 rupees. Okay, so let's see one by one. So left side, when you open the system itself, when you open this itself, left side you will be getting a default terminal to add stocks. Say for example ICICI Bank, it's there already. So what I'm doing is I'm adding ICICI future. Next I'm going to add SBIN cash I'm adding. So same like that you can add as many script. I think there is a limit of 50-20 per watch list. There is a limit you can add here, and after that you can see by clicking this three dots, you can see Sami sir, it's very difficult. You can just explore more or less. It's very similar only. You can see here there will not be any big difference. Okay, so you can see here, so the three dots, it will show you the market depth. So top 5 buyers, top 5 sellers, and after that in futures it will same like that. In futures it will show you top 5 buyers, top 5 sellers. Dart stock in upstocks is a installer based platform, installer based trading terminal, a software which will get installed in your computer, and you can start using that. So that is the installer based software. So next, coming back, so here it is like adding the scripts, cash, future and options. So left side you can add these things. So once you click on this particular script, the chart will appear here. I think, see, please don't ask questions which is not related. Market depth analysis is completely different. So that will come into the uh, learning sessions. Now we are seeing where what is there. That's it. Okay. So don't ask what is the theory behind this. No, we are just learning. Let's not get confused. That's my humble request. So coming back. So click on this particular thing. You can see the charts. So this is the easy navigation one. So after that, if you want to enlarge the chart, you can click on this arrow mark. You can enlarge the chart in kite. So in case if you want to enlarge the chart, you can see here there is a pop-up where you can bring this particular chart into your big screen. So after that, coming back to upstocks. So here, so I'll show one by one from here. Okay, and from now, from starting from now till we enter into the intraday session. When intraday is starting, let's see. Intraday is starting on 31st December. So till then we will be learning only on daily charts. Are we clear? So daily charts in the sense one candle represents one day. This one candle represents one day. You can see here this one candle represents one day time frame. So we'll be learning everything on a daily charts only. We'll be learning everything, all the analysis we'll be learning on a daily charts only. Please don't ask any questions on 15 minutes, 5 minutes, lower time frame, intraday. If you become master in daily charts, intraday, BTST, swing trades, short term, scalping, everything will be like a cakewalk for you. Are we clear? Because the theory is like daily chart is the master. Daily chart is the master. So we will be learning everything on a daily chart. Just for understanding purpose, what I'm going to do is you can see here how to change the time interval. You can see here one day, you can click on this and change the time interval. Say like you want to see 1 hour chart. You can change this into 1 hour chart. So the chart will get changed. So rolling back to one day. And next, so these are the candlesticks. So whatever we are going to learn now is based on candlesticks. The chart analysis mostly, other than HAC strategy, everything will be on candlesticks. So these are called as Japanese candlesticks. Other than this, there are different types of candlesticks: line, OHLC, bar, hollow candle, volume, like this. New whatever things are coming as a new inventions, everything will be added because broker wants all the user base to come to this terminal. So he is adding everything. But for us, the basic traditional candlestick, that is Japanese candlestick, is sufficient. So we will continue with this. In case when we study HAC strategy, at that time we will change this into Heikinesi candles. That's all. So next is adding the indicators. So before that, any doubt related to whatever we have learned, don't ask what is the types of candlestick. That is coming in the tomorrow's session. So any doubts till whatever we have learned? Okay, done. So next, how to add indicators, how to add or delete indicators. So you can see here there is a chart like structure. So click on this, it will show you all the indicators which is available with upstocks. Mostly what all the indicators we use on a day-to-day basis, everything is available. For example, RSI. I want to add RSI. Type as RSI. Either you have to scroll completely or you can type a short name as RSI. It will come add. You want to add moving average. So type as moving average. Add. So these are the options to add indicators. So now how to delete it? Click on this chart again, close one by one or give clear all. Say like for example, I am having 10 different indicators I have added. So I want to clear in one stretch, clear all. So that's gone. So this is the option of adding indicators and removing indicators. After that settings, nothing to be done here. No need to do anything here. We can just leave it. So all the options is required. Maybe volume is if required, you can keep, or else you can take this volume because we will add volume as a different layout. We will add it. So after that, you can see here, these are the things we are not going to use. Fibonacci retracement, there is one separate session. So that session will be given by Prabhu. So next, Other than that, you can see here there is an option to draw trend lines, draw a square box, rectangle. So these all the things we are not going to learn, because we are going to learn with the fixed templated studies. That means, for example, now it is Reliance, right? So if you change Reliance to IndusInd Bank, so these studies will come by default. These studies will come by default. For example, if you are going to have a study based on marking the trend lines and support for every stocks, so what happened? You have to mark the trend line for stock for every stock by yourself. So you can mark a trend line like this. So this will be differ from stock to stock and time frame to time frame. So that is the reason we are not going with the study, because you have to draw this kind of trend lines or the box supply demands for 200 stocks, which is very difficult. Number one. Number two, when I was practicing supply demand, every Saturday from morning 9 to 11 o'clock, 2 hours, I'll be marking supply demand zones to zones in all the charts. Again, we have to put a price alert. So no proper screeners is there. So that is like a different type of study. We are not going to do this. Whatever we are going to learn is a very easy way of technical analysis. So let's see what is being completed. So done. So it's done in the sense it's not done. So you have to explore everything. You have to just see there is no complicated tools is inbuilt. Whatever we have seen here, that is what we are going to learn in the coming classes. So I am sure that 100% of this terminal you will be getting used at the end of the session. Clear? So here you can see Nifty. You can change it to Nifty or Bank Nifty. You can see here. After that, whatever is the profit or loss for the current day, it will be updating here. After that, the balance. So once you want to check your balance, so you can see here, add funds. It will take you to the bank. Commodities, open request, everything it will come. Fund withdrawal, everything will come. And how to say, what else? It will show which thing you want to see, which sector you want to see. It will be available. Say like you want to see Nifty Bank or Nifty Next 50, Nifty 50, Sensex. Someone will be tracking with Sensex, so that option is also available. Same thing applies in Kite. You can see here, changing the time frame, views. I can save the templates, display the chart styles, studies, the indicators, layout, whatever is the preferred layout, everything is available here. You can see here holding, positions, funds, and dashboard. So these are the things. Same like that. Same like this. I left out one more thing here. You can see here order book. Whatever the orders you place, before execution, that means the price is 306. The price is 306. You are marking an update. You are marking a buy signal to buy 100 shares of State Bank at 304 rupees. So the price is just above that. So the orders will not get executed. That will be as a pending order in this place. It will show you the pending quantity. I don't think audio there is an issue. Let me check. I don't think there is an issue from my side, sir. You have to check your internet. Okay. So the pending orders will be updated here. Once the order gets executed, that will be updated here as a trades. Say like for example, you are placing buy order of 100 quantities of State Bank. 50 got executed and 50 is pending. So 50 will show here as a pending quantity and 50 will show as here as a executed quantity. So next, positions. That means what is the positions you are having for that particular day. Say like for example, future, options, all those things will be listed here. Holdings in the sense whichever the stocks you bought in cash market, that will be listed here. So that is how you can see the position tracking. This is called as position tracking, order tracking or position tracking. So same like that in Kite, it will be available here. So everything will be available here as a positions, order, holding, positions. After that, funds in, funds out, add funds, withdraw funds. Same like that, add funds, withdraw funds. So let's see which all we have to complete it. So this will take time. We will learn holding okay. So now let's see how to place orders. See, order, when we speak about order itself, how to say that every broker is having different name. So in Zerodha it will come as MIS-CNC. MIS-CNC in the sense MIS in the sense margin intraday square off. So that is the meaning of margin intraday square off. So say like for example, you are going to buy IB Ventures. IB Ventures 100 stocks in intraday. You can see here 100 stocks you want to buy in intraday. So MIS in the sense intraday, CNC in the sense cash carry delivery based trades. Are we clear? So this is in Zerodha. When you click here itself, intraday square off with extra leverage. So leverage you will see later. What is that leverage? You will see later. Same like that. When you click on this buy here, you can see by default it will come as simple, and you can see here it will come as a intraday. It will come as a intraday, and when you change it into CO cover order in the sense, there will be option to put stop loss also. There will be option to put stop loss also. So say like for example you want to buy 100 shares, and you can see here the very important thing to be noted in the order type is don't buy in market price, always buy in limit price. That means say like for example current market price is 306.8. Even if you want to buy at 306.8, you buy here, you change the order type as 306.8, sorry, change the order type as limit, and change it as 306.8. so this is the way you have to buy, or you can put even 307, or you can put even 307. But if you just give us a market price as a limit, as a market order, just a minute, let me change. If you place as a market order, what happens if the stock raises to 315, the stocks will be bought in 315 also. So it is very important that putting limit price is very important. For example, 100 quantity by 307. Instead of you can give little more slippage, you can add stop loss and target. When you add stop loss and target, here it becomes OCO. OCO in the sense once cancels other. That means if the stop loss is cancelled, stop loss is hit, the target order will be cancelled. If the target is hit, the stop loss will be cancelled. So this is on intraday. Next, simple, change it into delivery. In cover order, limit price is applicable. In cover order, limit price is applicable. I am not sure. What I do is I take only, I trade as my personal trade. I trade only simple orders. Simple orders in the sense I buy. After that, I put a stop loss. After that, I close the position. So this is the way I follow. Follow it. Do it in a very simple way so that you will not have a confusions. So in case you want to take some exposures and you want to trade, you can go for the OCO orders, or you can go for cover orders. Okay. So these are the different types of orders. And next is simple delivery. Delivery in the sense you are going to buy a stock today. In case if it is hitting the target today, say like for example you are buying for 100 rupees. If today itself if you are seeing a considerable profit, it gave a movement of 3-4 rupees in today itself, you are sufficient. You can close the order today also. Today itself you can close the order. But you should buy in a delivery mode if you want to carry forward on the next day. We can put stop loss for positional order. In Kite it is available. Let's see. Limit, stop loss, stop. So entry is buy, cash and carry. More options. So I think there is no options for putting a stop loss. Let me check. I am not sure there is an option for GCC order. You can check, you can discuss in the group, or someone can just Google it. It should be available here ideally, but it is not available. I'm not sure why. Sell, okay. We have to put a sell order for stop loss. Stop loss, CNC, but still it should be available here. It is not there. What is trigger price? I'll come. So now let's summarize. Let's summarize what all we have seen. We will see one by one, or else in this itself we will be confused. Okay. Now how to place orders? I'll show you in a simple way. Let's not get confused. See, these activities, what you have to do is you should start this activity by doing testing with some stock which is less than 100 rupees. Try all the different types of orders. Okay. Try all the different types of orders. BO option shows stop loss in zero. So that's what I am telling. Excuse me. This place alone, how to place orders alone, there is different types of order. It is very difficult. If I start taking the types of order, it will not be sufficient even for 5 classes, because every broker is having different types of order. That will be very difficult. You have to learn yourself. I'll show you the basic thing which is required: how to buy, how to put stop loss, how to buy and put stop loss and target. So these two things I can able to explain you. Yes, there are many tutorials in YouTube, or you can ask the customer care to send the link so that you can understand that. Okay, so coming back, I'll show you in a simple way. For cash market, when you buy, go to simple. I am explaining you the simple order. Limit, it should be limit. If you are buying in an intraday, you can buy in an intraday and add stop loss. Add stop loss. That is very important. Okay, Vinod. So coming back, you can see here, if you are going to trade, I'll show you two trades. One is for intraday, one is for delivery. You can see here, one is intraday. So by default, it will change into OCO. I'm not going to see here and all. I'm just going to show you intraday and delivery. Okay, you can see here intraday. So put the number of quantity 100, buy price 306.8. So stop loss, you can add 3 points. Say like for example, I'm going to buy at 306.8. Just put the numerics here. 3 point is going to be my stop loss. It will take the value here itself. Target, it's going to be 5 points. It will take the value here itself. Buy, that's all. Once you confirm, the order is done. Stop loss, target, everything is done. So after that, it will be in the pending orders. If you want to modify, you go and change it. Clear? Done. Next one is, if you want to do a positional trading, that is delivery trades. If you want to do a delivery trades, so change here into delivery. Forget about this, I'll explain you later. You can see here, simple delivery. You are going to buy the stock for delivery. So you are going to put the price. Forget about disclosed quantity. This is completely junk. Put enter, the stock will be bought. So these are the two types of order. Say like for example, you bought this. So now you want to put a stop loss. So stop loss is nothing but a selling order. In buying, you cannot able to put a stop loss. Stop loss is nothing but a selling order. Assume that we are having 306 quantity, sorry, 306 rupees, we are having 100 quantity. So now same SBIN, go sell. So take the position here as stop loss. Again change here simple, stop loss limit. Okay. So here one more option, trigger price will come. Change it here delivery. If you put as a intraday instead of putting delivery, it will take us a fresh order. 100, 302, for example 300 or 295. Since it's a delivery trade, the stop loss should be little bit in a distance place, 298, and here trigger price should be 299. That means if the stock is crashing, suddenly, it should get captured in between a gap 299, 298. So that is called as trigger price. Are we clear? Suddenly if a stock is crashing, so your stop loss is not met, so it should get in a bucket price, so that at least with this much loss we have to close the position. So that is the reason we are putting trigger price. So next you can see here, so once you give this, close, so your stop loss will get placed. Always sell price and trigger price should be 1 rupee higher. So instead of, in between the sell price, trigger price should be not 1 rupee. Sorry, I'm extremely sorry. It's not 1 rupee. It can be 10 paisa, 15 paisa. From this price, this price should be higher, little bit higher. You can put even 298.05. I am placing a simple order, then I can able to place a stop loss, target stop loss, but it is possible to trail. You have to trail manually. There is nothing called as manual trailing, sorry, automatic trailing. There is an option of automatic trailing, but that doesn't work mostly. So you have to trail the stop loss manually. I'll explain you how to trail. So coming back to here, buying a stock, you can see CNC in the sense it's very clear, cash and carry. Put the price, trigger price, and change it into limit. Okay, cash and carry, change it into limit price. Put the price, number of stocks, buy. That's all over. So in case if you want to put a stop loss, then it will be a sell order. It will be a sell order. Again, cash and carry 100, 645. Change here, stop loss, limit, stop loss. You can see here price, trigger price. So 645, 646. Are we clear? Delivery trades, you cannot put the targets. You have to close the position manually. So these are the basic simple orders. More details you have to check with your broker. Either it may be Upstocks or Zerodha. You have to check with your broker, because there are the new type of orders, say like AMO orders, OCO orders, different types of orders have come. They are everyday basis, they are updating. So first option, you have to check with your broker. Second option, you have to trade practically with limited quantity, which is less than 500 rupees, and take the practical experience. Trigger price, Varsha, that is what I told you. Assume that you bought some stock here at 300. Okay, you are putting stop loss here at 295. Suddenly the stock crashes. It didn't came 295. It straight away went 294. What you will do that time? Your stop loss will go, right? So that is the reason we are putting a trigger price. So if you put a trigger price 295 and 296, 294, 295. So when it crosses this area, it will get triggered in between this 1 rupee gap. Clear? So stop loss is very, 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 very important. Since you don't know how to put stop loss, don't ignore that. That will be a very, very big mistake. Are we clear? Since you don't know or you didn't try to how to use stop loss, if you didn't, because of that, if you are not putting the stop loss, it will be a very costly mistake. Please do not do that. Clear? So next is what will happen between 294 295. Whenever the price is going in between 294 295, it will get closed. It's not only for sell side, it is for buy side also. If you are going for a short, then you have to put a stop loss on a buy side. Stop loss limit. The difference is stop loss market, in the sense it will get closed immediately. In the market price, it will get closed immediately. Stop loss market. Stop loss limit, in the sense which price you are putting, that place the stop loss will get closed. For example, the difference between SL and SLM. You are buying at 300. You are putting stop loss as 294. So it will wait till the price comes to 294 and it will get closed. You are buying here at 300. The price is at 301. And if you are putting a stop loss market, it will get closed. It is nothing but a close order. Stop loss market is nothing but a close order. Are we clear? Or if it is in, say like you have bought at 300, you have put Stop loss market at 294, current market price is at 296. It will get closed immediately. If you want to place order in the evening today for tomorrow target, sir, that is absolutely, it will not work, sir. How can you do something on a closed market? I'll read the question completely. So if you want to place an order in the evening today for tomorrow with the target stop loss, whether it can be done in any platform. I have seen AMO orders available, but target stop loss are not available in that. Sir, how can we able to decide tomorrow's market, sir? If we know something, if I can able to predict something like that, I'll be a god. Am I right or not? Why I'll be taking training sessions like this? Simply I'll tell you, evening 7 o'clock, you buy this stock, put this level as a stop loss, put this level as a target. It will keep on going. No, that is absolutely not possible. Next day market, we cannot able to predict, sir. We can predict uptrend or downtrend or entries, everything we have to decide on the live market only. How to close the order if stop loss putting in simple order? You have to just right click and square off. That's all. Okay. So are we clear with this? It's not only in this batch, every batch, this part is being a confusion. This thing is no other option. You have to learn by yourself. Please take your time on this weekend. Watch 2-3 videos of putting orders. Try this in Monday market, and you have to be thorough with this, because what happens in this order, I have done big mistakes. The reason is, for example, I might have bought 300 rupees some stock. Stock will be at 295. Instead of closing the position, again I will buy one more lot. So what happens? It becomes average. I'll be in short selling. Instead of closing in buy, I'll short sell one more lot. So this is a very costly mistakes which will give you 3,000-4,000 loss in a simple time. So please do not do that. Vinod, I'll give you the update at the end of the session, or I'll put you in the communication session. Okay. So how to put stop loss in percentage? So stop loss, as I told you, stop loss should be calculated manually. You cannot able to arrive a stop loss by percentage, or for this particular stock, this much is the stop loss. We cannot able to do that. We will see in the detailed session, sir. As of now, we have learned how to put stop loss. If you are buying at 100, if you know 97 is the stop loss, we have learned how to put this 97 in the trading terminal. Are we clear, sir? Only that much we have learned. How to calculate stop loss, we will see later. So coming back, margin exposure. See, maybe it will be a dry subject in the starting of the session. Say, starting of the curriculum itself, it will be a dry subject, because these are the place which is very costly mistakes. What we study, what we learned in the first, money management. So without learning the money management, if you start trading based on Genie calls or master calls, or based on the stock phoenix calls also, you are bound to lose money. So that is the reason we are taking money management in the first session itself. Number 2, all about Nifty. We should know, at least we should know how much market is giving an opportunity to trade for us. How much market is giving us an opportunity to trade. So that is the reason we have learned about Nifty. Now it is basic. After that, from tomorrow, it will be like left and right. It will be an interesting subject. You will be having homeworks. You will get engaged by yourself. Clear? So only today it will be a dry subject. So next, margin exposure. So these two are very, 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 very important place. Margin exposure is nothing but credit card and loans. So do you think this is good? Both are good. Do you think this credit card and loans, these both are good for our life? Yes, it's required. Credit card is required to use airport lounges. Debit card, yes. Now I'm telling about credit card. That is used to enjoy the airport lounges. But what we do, we swipe and we pay interest. So it is like this. It is like this. It is the easy way of explaining is like this. Simon, for example, I am buying 100 stocks in OCO. Sir, OCO first. Okay, OCO, order that target is 120, stop loss is 90, and the trailing stop loss is 2 points, means which price increase to 102, your stop loss will increase to 92. It will increase to 92. It will increase to 92. That's right, but I am not teaching you the trailing stop loss method. You can learn from the experts. The automated trailing stop loss is available, but most of the time the trailing stop loss will hit immediately the position you buy. The reason is, I'll explain you. Trailing stop loss, you think when you put a stop loss here, it'll go like this, and when it returns, it will hit here. This is what you are thinking, right? This is the current market price, and this is TSL. So market price goes like this, your TSL will come here. Again, when the market price goes like this, TSL will come here. So same like that, this is the reason TSL has been created, but unfortunately market does not move like this. The moment you buy and when you put a stop loss here, first it will come near the stop loss, after that only it will start moving up. Again it will come here, again it will start moving up. So this is how it works. It works in a retracement method. So when you put a trailing stop loss here, the next place, this place itself, your trailing stop loss will hit just near the cost. That is the reason TSL is a utter failure method. Or else we have 1500 students inside Stock Phoenix. This TSL method will be a very popular method. Am I right or not? If some technology is working properly, do you think these many masters, these many students are there, someone will leave this without taking the benefit of that? So TSL is not a successive mechanism. So coming back to margin and exposure, sorry. So margin and exposure, margin, capital, balance, both refers the account balance which is in your demat account. Margin, when I ask you what is your margin, what is your capital, what is your balance, so these three refers the account balance which is available in your demat account, not in your bank account, not in your fixed deposit. Forget everything. Even if you have 5 lakh rupees in your bank account, if you have kept only 10k in your demat account, that is called as margin or the investment or balance. Clear? So it is a very simple explanation. Margin funding in the sense, just now we have seen here, right? You can see Zerodha, it's not available. In Upstocks, it's available. When you go to buy here and when you change this into delivery, what you can see here, get the stock with 50% of your funds. Get the stock with 50% of your funds. It's a good option, it's a bad option. I'll tell both the way how it works. That means if you are going to buy 100 stocks of SBIN, so how much actually it's required? How much capital is required? 100 into 306, that is 30,000 rupees. So if you have 15,000 rupees, you can buy this State Bank as a delivery. So 50% of this particular 50% for this particular stock, they give margin funding. That means they give loan. So margin funding in the sense, this is done only for a delivery trading, one time exposure, that is one time credit limit they will give. So there is a charges for this. There is a charges for this. The traditional broker like Nirmal Bank, Sharekhan or Angel Broking. So these kind of brokers charge in between 18 to 24% interest per annum on pro data basis. Where Upstocks, they are charging, you can see here flat, they will be charging 50 rupees, I think. You can read this later whenever you have time. And charges applicable, you can see here 20 rupees per day for the slab of every 50,000 rupees. Say for example, if you take 80,000 rupees, they'll charge you 40 rupees per day interest. Okay, per day as a charges. So this is good as well as bad. So good in the sense, if you are a very good expert in doing your delivery trading, if you have 1 lakh rupees, you will get 1 lakh rupees. And if you are going to make 5,000 rupees profit, instead of 5,000 rupees profit, you will make 10,000 rupees profit. If you are making 3,500 rupees loss in 1 lakh rupees, here you will be making 7,000 rupees loss. So if you are good in technicals, margin funding is good. If you are bad in technicals, don't turn that side. Who didn't understand this? Clear, right? So next, exposure. You can see here very clearly I have highlighted in red. So it is, I'll tell you, it is worse than credit card. The brokers, what the facility they give, we can't tell everything is a benefit, right? So there will be some intention while they give some money as a free money. So to be very clear that brokers are safe. Say for example, if you are having only 10,000 rupees in your account, broker will allow you to trade for 2 lakh rupees. Broker will allow you to trade for 2 lakh rupees, and if you are in profit, you can close the position by yourself. I'm repeating, for example, if you are having 10,000 rupees in your account, they will give you 20 times exposure, 20x, even they are giving 40x to some stocks. So 2 lakh rupees you can take a position if you are making 3,000 rupees profit, okay, or if you are making 5,000 rupees profit, you can close the position. The same thing when things goes in negative, minus 3,000, minus 5,000, minus 7,000, minus 8,000, this place they will close the position. So your money till it becomes zero, the position will be there, not exactly zero. When 80% of the 80% of the 80% of the capital goes in negative, in loss, they will close the position by yourself. Is exposure same as leverage? Both are same only, sir. Exposure, leverage, both are same only. So it is very dangerous thing to take leverage and trade, to take exposure and trade. Say for example, you are having 10,000 rupees. You are having 10,000 rupees. So you are taking position for 2 lakh rupees. So coming back, suggested exposure is 4 times. How much we are, I'm telling you take, but you take only 4 times. So if you are having 10,000 rupees, take position for 40,000 rupees. Say if you see here, you are buying a stock of 500 rupees, you are having, actually you are having 10,000 rupees, you can buy 20 shares. This place you can buy 400 shares, here you can buy 80 shares. So if things goes wrong, out of 10,000 you lose 100 rupees, here you lose 5,000 rupees. That is 50% of your actual capital is gone in single day or in single trade. Where if you take whatever I am suggesting, say like 40,000, that is 4 times exposure, you lose 400 rupees. So loss is 4%, still it is manageable. Are we clear? So I just need half a minute break. So you can type, if you have any questions, you can type now. I'll just come back. So now tell me about pledging of our shares with holding. Yes, you can do, Simon. See, this can be done. I'm not sure about discount brokers. If you have, say like for example, if you are having a stocks of 1 lakh rupees, based on that, you can trade for intraday. You can trade even BTST also. That option is available with brokers, that you have to check with the respective brokers. Where is Fibonacci retracement in Kite? It's very difficult because I am not using that. So let me check. So Fibonacci retracement will come in somewhere in this left side. So you can check that, sir. Yes, you can see here. You can check this on tools. So in the drawings, okay, you can select. So what all the things you want, you can select here. You can see Fibonacci. Clear? That is, we are not using that actively. So next is what are the difference in buying in delivery mode and margin mode? So that's what I told you. No, buying in delivery mode, you are buying in your money. Buying in margin mode, you are buying in broker's money. 50% you are buying in broker's money. If you are very confident about the trade, you can do that. But or else it's not suggestible. What is the, sir, suppose I took a margin having 10K, traded amount of 1 lakh, and the broker is going to take interest for the difference of 90K. See, that is what he has mentioned very clearly. Even if you are having 50K, if you are assume that you are having how to say 10,000. No, when you are having 10,000, he will not give you first 90,000, right? 50-50 only. You can take only 10,000 rupees exposure, 10,000 rupees as a margin funding. So, but for that also he will charge 50,000 rupees brokerage. That is the charges. So Fibonacci retracement is there. BTST order where the leverage is available can we buy only as per our margin. So in BTST order, whether any leverage is available or we can buy only as our margin. See, delivery trade becomes BTST trade. I told you very clearly, right? When you buy in delivery itself, that is a BTST trade only. That is a BTST. If you close in 5 days, that is a BTST. If you close in 15 days, that is a swing. If you close in 15 days, that becomes our short-term positional. If you close in more than 3 months, then it becomes long-term positional. Uh, Sakit, Sankit, I don't think there is an option for margin funding in Zerodha. You can check with the customer care team. Okay. So now we have completed till here. So now bid price and ask price, bid price and ask price. So this also we will learn detail in the coming classes, but just let's understand what is bid price and ask price. So on this you can see there will be a four lines small, you can see here. So this is the first bidder, this is the first seller. So this is the place. What is the exposure for intraday and futures? That we will see in the derivative class, Madhu, because we have a detailed study on span margin, all those things we will see in the derivative classes. Okay, so this is called the first bidder, first seller. So the difference between the first bid price and first sell price is called as the spread. So can you tell me what is the spread here now? How much? How many rupees? Yes, 5 paisa. It's only 5 paisa. So it's only 5 paisa. Samir, no Samir. I think order complexity, I told you very clearly, we are not going to see that. It is very difficult to complete everything. So next, same like that, you can see here. I'll show you one more thing. So now how much? What is the difference between the spread and the bid and the ask? See, 1 rupee 45 paisa somewhere. So the logic is bid price and ask price, the difference should be less than 1%, less than, sorry, 0.1%. It should be less than 0.1%. Say like for example, I am ready to sell at 1000 rupees. Someone ready to buy at 998. Will this transaction happen? Will this transaction happen? I am ready to sell at only 1000 rupees. Someone is ready to buy at only 998. So what is the difference here? 2 rupees. So this transaction is not going to happen. So same like that, here when we see the difference between the bid and the ask price, the difference should not be more. That means it should be more or less, it should be in very how to say, in paisa difference it should be. Then only the spread, the future or the cash or the option liquidity is good. Someone is say like 541, 535. That means just by seeing this spread itself, we can able to understand that the liquidity is not good in this particular stock. Just by seeing this bid and sell strategy itself, you can understand that the liquidity in this stock is not very good. And the difference between the buyer and seller should be, in future it should be 500 rupees. In future it should not be exceeding more than 500 rupees. In option it should not be exceeding 300 rupees. So this is something I will keep it as a pending. Whoever can understand till here. For example, ICICI Bank, how much spread we saw? 0.05. So what is the lot size of ICICI Bank? 5 paisa we saw. 5 paisa. What is the lot size of ICICI Bank? Liquidity means the number of shares getting traded. So lot size of ICICI Bank, let's see. It's 1375. So 0.05 into 1375. So 68 rupees. So is this within the limit of this 500? Is the 68 is in the limit of 500? Yes, the difference between the spread takes place only when, yes, that is the, then only we have to trade, or else we should not trade. With this we can able to identify the liquidity very easily. Okay. So this we have a detailed explanation in the derivative class. We will see that margin exposure we have cleared. Does it apply for cash trade also? Yes, for cash also it applies. It should be 0.01%. It should be 0.1%. It should be less than 0.1%. So now short selling, I will keep this pending. Intraday BTST. Trigger price we have completed. So now short selling. Let's come back to short selling. So now let's see very clearly. Long or buy, both are same. Instead of giving long, instead of giving buy, someone will tell us technical term is called as long. Long ICICI Bank at 320. That means buy ICICI Bank at 320. Short ICICI Bank at 320. That means sell ICICI Bank at 320. After buying ICICI Bank at 320, if you sell at 320, it means closing the previous order. Are we clear? After buying 320 rupees on ICICI Bank, if you are selling again at 320, that means closing the existing order. If someone is telling short ICICI Bank 320, in the sense that is called as fresh order. So that is the technical term we have to understand. Okay, so next, for example, you can see here, buy 100, target 105, stop loss 98.5. So this is the normal routine, everyone knows this. Next, So this is the routine process. Buy at 400. If we buy at 400 and if we sell at 20 rupees, 420, we are getting 20 rupees profit. Okay. If we buy at 400 and if we sell at 380 rupees, we are making 20 rupees loss. So it is a very normal process. In all trades, this is very common. Next. Let me take this. Okay, now just to make understand this, just to make understand the short selling in a simpler way, I'll explain you. Say like for example, iPhone, Apple mobile, which is selling at 50,000 rupees, which is selling at 50,000 rupees. One vendor is coming to me. Vendor, not vendor, a customer. I assume that I am a shopkeeper. I don't have the stock of Apple mobile in my hand, and someone is coming me and I am asking Apple iPhone 7. So I am telling 50,000 rupees. The deal is closed, but I don't have stock. I am asking to my supplier that I am asking, do you have this? Can I come and get this? He is telling, yes, you come and get this 50,000. He is telling me 45,000 rupees. So I am thinking, I'll have 5,000 rupees profit and I am selling it. I have sold Apple mobile for 50,000 rupees. Okay. So next day, the day evening, I am going and I am asking him the phone, but he is telling it is out of stocks, it is gone. So no other option. The trade which is done here is done. I have given the invoice. I can't go back to the customer and tell that I'll give refund. No, I have to hold my reputation or whatever it may be. I cannot able to come back in my words. So what I'm telling him is, I have to get the mobile. So what we are supposed to do? I have to find another dealer. So fortunately, other dealer is giving at 48,000 rupees. So now is this a trade profit or loss? I sold without having the stock in my hand. I sold. So assuming that I'll get this for 45,000 rupees, I sold. But unfortunately, I got from one more vendor, one more supplier, I got at 48,000 rupees and I closed this trade. Sir, first, one client is coming to my shop and asking iPhone. I am telling 50,000 rupees. I sold it. Okay. But there is no stock. I am telling you come tomorrow morning. So he paid the money, he went. So evening I am going to the supplier, he is telling there is no stock. So I am finding one more supplier. So he is giving me at 48,000 rupees. I am buying the stock and giving the stock to the customer next day morning. So this trade is profit or loss? Profit. Okay. But unfortunately, in the other case, as my vendor is supposed to give me at 45,000 rupees, he didn't give. I have to buy and give to the customer at 52,000 rupees. So this is profit or loss? Loss, 2,000 rupees loss. So in other case number 3, 55,000 rupees. 55,000 rupees. Now it is profit or loss? Loss. This is called as short selling. I am selling a stock. I am selling a stock which is not in my hand. I am selling a stock which is not in my hand. I am anticipating, I am predicting, or I am analyzing that some stock is going to go down. Some stock is going to go down. So I am shorting. I am selling the stock which is not in my delivery, which is not in my delivery, which is not in my DP, which is not in my depository. So I am selling a stock, which means if you do a short selling, okay, if you do a short selling, you have to close it in the same day in cash market. Short selling at 400, closing at 390. This is 10 rupees profit. Short selling as 400, closing at 440, 40 rupees loss. So because I am selling some stock which is not in my hand, so I have to close the trade that particular day itself in cash market. In future and option, you can carry forward. Okay, forget about future and option. In cash market, especially when you do short selling, you have to do your short selling only in intraday basis. MIS or intraday. Don't do your short selling on delivery mode. Okay, short selling means first action is selling, second action is buying. That means this is 100% required because now market is in a complete uptrend. Yes, we are good. Even if we are not doing short selling, we will buying in the low and we are selling in the high. But when market is completely in downtrend, say like 3 months market is downtrend, so will you sit idle? No, right? So you have to do short selling. You have to learn this also. First action is short selling, second action, that is closing the position, is buying. So it is a indirect fact that you have to close the position in the same day itself, whatever may be the cost. Say like for example, you are short selling at 400 rupees. The price shooted up to 480. You have to close, sir, no other option. Are we clear? You short sold at 400, the price came to 360. Yes, you have to close. If you don't close, you will get penalty here also, you will get penalty here also. Who didn't understand this place? Cash market, if you do short selling in cash market, if you do short selling, whether it is in profit also you have to close, whether it is in loss also you have to close. The ultimate thing is you are selling some stock which is not in your hand. Is this applicable for intraday only? Yes, it is applicable only for intraday. If you start your trade even by 2:30 p.m, you have to close before 3:15. Are we clear? So either you are in profit or you are in loss. If you don't close the position, there will be a good amount of penalty from the exchange. Okay, so you have to close. To avoid this, there's a simple, very simple option. While taking the order itself, assume that this is our first order, this is our first action. Our action will be selling. Assume that I am expecting a State Bank to go down. So go for a short selling and select intraday. If you select intraday itself, automatically stop loss will ask, it will ask you for a stop loss, it will ask you for a target. Even if you are not closing the position, 320, the broker will close the position by himself. Even if you are not closing the position, the broker will close the position on behalf of you. They'll charge another 20-30 rupees as a penalty. If you do in short selling, if you do in intraday, if you do in delivery, exchange will close on behalf of you. Penalty will be approximately 3,000 to 5,000 rupees, sir. Broker will buy automatically, but he'll charge you 20 rupees more. That is fine, right? It is not a gambling, sir. It's a pure technical, sir. No doubt in that. Do you think you will buy State Bank in this area? Every day morning, go and do short selling in this areas. Sorry, IndusInd Bank. So short selling, we should be very clear. So while explaining in future studies, I'll explain you more details about short selling. So now intraday BTST delivery swing, I think we have learned clearly. Call option, no sir. Call option we will see later only. Next, pre-market. Yesterday we discussed 9.00 to 9.07 is the pre-market. We can understand which stock is in gap up or gap down or in a flat trend. That much we can understand in pre-market. Can we sell a stock bought for delivery before it reflects in demat? Like it will be showing T+1. Yes, you can do it, sir. But very non-listed stocks you can't do. Very non-listed stocks you can't do. Say like a stock which nobody knows the name, that you can't do. Say like Reliance, HDFC, IndusInd. These all things you can do because there is something called as pool account with the broker, and the brokers will be having stocks. We cannot do in Edelweiss. Okay. BTST I am going to explain you, sir. Will our order executed in pre-market? Yes, you can. Your order will executed in pre-market. In Zerodha I have tried. I don't know about other options. So next is Trigger price we have seen. Intraday BTST, I will come back here. It is available. Let's see this. News. As we discussed, do not trade based on news. Watch news to avoid news. Okay, that is very, very important. Watch news to avoid news. Avoid the trade. Avoid that particular trade. So if you see there is a news in ICICI Bank or India Bulls, keep away from that stock. Or it will be like a betting trade only. Clear? So same order you have to place in pre-market, sorry. The same order, whatever you are going to put in the market hours, if you put the same order in 9.0, 9.002, 9.07, it's a pre-market order. No big difference. So next, market connectivity. So this is very, very important. So this market connectivity is very, very important. Is it possible to make limit order in pre-market? Limit order, I'm not sure, sir. I'm not sure. It will ask for price, I think. You can try with one stock tomorrow morning. So market connectivity is very, very important. The important markets, that is the global markets. The important global markets to be noted is NASDAQ, FTSE, CAC and DAX, okay, European, US market, and Asian market, SGX Nifty, and after that 1, 2, that is Nikkei and Hang Seng, to an extent Shanghai Composite. So this is what is the connectivity we have to see. So the market cycles will be like this. The market cycles will be like this. How to place pre-market order in Zerodha Bharat? That is what I told. How you are buying and selling in normal market hours. Same like that. Try in 9.00 to 9.07. Very simple. There is no special technique for placing order in pre-market. If you place the order by 9.00 to 9.07, that is the pre-market order. You are entering in the pre-market timing. So the connectivity of the global markets is like this. For example, Nifty, SGX. Okay, so Nifty, you know what time market opens and market close. So after market opening, FTSE, I'll simply put like European markets open one by one. So after Nifty opens, after our Indian market opens, European markets open one by one. If Nifty is in flat positive or positive and European market opens in positive, Nifty may travel further positive. Listen carefully. Nifty has opened today morning flat positive or trading at positive 50 points. Around 12 o'clock, 1 o'clock, European market will open one by one. So by that time, if that is also in positive, Nifty may travel further positive. If it is in negative, and this is also opening in negative, this will travel further negative. If Nifty is in flat negative and European market is positive, so Nifty also will come into positive. So ideally, Nifty will follow the trend how this market is reacting, the global market is reacting. So once this is over, again SGX. So XGX, we can see what is the Singapore market, Singapore Nifty. This is SGX Nifty in the sense Singapore Nifty. So we can understand what is the situation of the SGX market, and after that US market. After that again Singapore market. So the time to watch here is 8 p.m. 4:30. You can see here, you can see 12 to 1, 9 a.m. and again here 6:30 a.m. 6:30 to 7. So if you see this cycle itself, this is going to support and help each other. So this is how it cycles. Clear? So say like for example, you have taken a huge position in long. Next day morning you are seeing SGX Nifty 90 points negative. So you can be very much prepared that all the stock is going to go down, and you can be ready to book stop loss. Same like that, you have taken huge long positions. Singapore Nifty is 190 points positive. You can be prepared to book profits. So today's data not possible. Today's data, okay, let's see. So now Nifty is closed at 73 points negative. Okay, Nifty is closed at 73 points negative. See the price 11,840. So when we see the Nifty future 11,862, it has been closed in negative. So when we see the Singapore Nifty, from this closure, it has been recovered in the sense flat positive. So it is flat positive, and after that when we see here again this is flat negative. Tomorrow morning predicted is Singapore Nifty will be in between -20 to +20. So tomorrow pre-opening will be in a flat market. So tomorrow morning 6 to 7 this Singapore Nifty will be in +20 to -20. Maybe by 9 o'clock there may be some changes based upon this changes, because this market is going to run for this night. So if this is crashing further, this will be again further negative. If this is gearing up, this also will gear up. So this is how this cycle happens. Singapore Nifty trades in 2-3 hours interval throughout the day. There is a break, there is some break, say like market session is like that. Okay, so direct relation, what is the direct relation? In the sense it is the global economy, right? So if the India and US friendship is good, the financial the economical understanding is good, so both markets will have a positive trend, or whichever is beneficial, that will have a positive trend. So which is same like that, it goes vice versa. So now coming to intraday, I think this we have seen in the money management session itself. We have seen. Let me explain again. Intraday trading in the sense buying and selling the stocks in the same day, or selling and buying the stocks in the same day. Okay, buying and selling the stocks in the same day, selling and buying the stocks in the same day, cash, future and option, everything you can do. BTST in the sense buy today, sell tomorrow. If you buy today, and if you take that for the next day, if you carry forward the stock for the next day itself, that becomes a BTST. That becomes a delivery. That becomes a swing trade. It depends upon when you close the trade. When you close the trade, that becomes that is the decision, final decision. You can see here in BTST, STBT, delivery, swing trade, positional, all type of trading is decided by us only. All the types of trading is decided by us only. So that is what I am telling Srinivas. If you buy the stock in delivery, that becomes a BTST, that becomes a delivery, that becomes a swing trade, that becomes a positional trade. It depends upon when you close the position. See, for buying the stocks in BTST, that is a delivery mode. Buying the stocks in BTST, delivery mode. Delivery is delivery mode. Swing trade is delivery mode. Positional delivery is delivery mode. For everything it's a delivery mode, but the thing is like the moment when you close it, the time when you decide when to close, that becomes the types of the trade. So buy today and sell tomorrow, 4 days. Cash, future, option, it is applicable. STBT, sell today and buy tomorrow. It is possible only in future stocks. It is not possible in cash market. Delivery, buy today, sell tomorrow. So that is only but delivery in the sense it is only possible in buying the stocks. Swing trades, buying and selling, holding for a couple of days, weeks, for example 5 to 15 days, that's a swing trade. Positional trade, that is delivery, short term delivery, 1 to 6 months. Long-term delivery 6 months and above. So generally what in Stock Phoenix we tell is short-term delivery in the sense up to 3 weeks holding. So scalping intraday in the sense buy and sell in sometime for small profits. Buy at 100, sell at 101. Buy at 100, close at 99, 1 rupee loss. Buy at 1000, sell at 105. So this is called as scalping trades. So it's a painful trade. Apart from other country market, what all factors will affect Indian market? News from government will affect Indian market. Many factors are there. So any doubts? So I think that's it with the day's session. So we can see tomorrow. Can you please show BTST in Zerodha? Sir, I told you very clearly there is no special buying methods for BTST. You can see if you put this order and if you buy, that becomes a BTST. Are we clear? If you carry forward the stock, that is a BTST. That is a delivery. That is a positional trade. That is a swing trade. The question, whichever the way you want to take off the group on the group, yes, you can do it, sir. Okay, one more thing I left. One more thing I left. So let me explain tomorrow the trading stop loss. It will take some more time. So one question, whichever the way. Okay, we are getting message trailing stop loss. Okay, TSL I'll explain you tomorrow. Please send the link to open an account. Yes, I'll update. I'll put that in the group. Scalping with technicals, we can do it, sir. We can do it. Yes. Thank you for today's session. Thank you. So tomorrow we'll meet tomorrow evening. Good night.